Good morning, traders from each and every part of the world that you're joining this series of the Daily Money Market Call from. My name is Kefa Eric, one of your market analysts here at HFM. HFM linking you to the global markets to access various financial assets. Now, before I proceed, today we are going to be looking at the continuing trend in gold, where we see gold printing higher highs and higher lows to proceed with the overall uptrend that has been in motion for better part of last year, and immediately after the slight retracement that we have been facing in the previous weeks. Later on, you're going to see that stocks are in a bearish momentum. We're going to see that stocks are melting, and we're going to see why this is all happening. In the midst of all this, we also have a weakening dollar, in fact, drastically weakening dollar, which could be put as an effect of economic stagnation in the United States, which is partially caused by local government policies and also international tariffs that the new administration has chosen to impact on her trading partners. And before we proceed, I would like to bring it to your attention that this is going to be a pre-recorded YouTube video, to mean that you could get this YouTube video at your own free time on our YouTube channel at HFM Kenya. Kindly like, subscribe, click on the notification button so that you're not left out in future content that we produce from time to time. That is quite informative and will help you in your financial journey, with our main goal being to fill the educational gaps in the financial markets. Also like, so that it improve our algorithms, and it is our commitment to you that we will keep improving our education to make it much more easy and understandable for you to commercialize the knowledge in the financial markets in the aim of making possible profits. Now, with that out of the way, on fundamental analysis, which is where we begin every day on this series of the Daily Money Market Call, we have got the ADP employment change, or the automatic data processing, which simply gives us an aspect about the labor market in the United States in regards to the private sector. Now, previous was at 186k, which was quite good. The consensus or anticipated what was at 140k, so we see a lower expectation, and the actual one came at 77k, which is lower than what was expected. This shows quite a struggling US labor market with the private sector, which could be attributed to much of the things we are seeing happening both locally and across the border of the United States, which is quite a powerful country, in fact the most powerful country in the world in our current times, at least economically speaking or otherwise. So the struggling labor markets could be attributed to quite a number of factors, and this is in place of the private sector. First, it could be attributed to the trade wars which are happening. Trade wars are making companies close down, right? Traders are making companies to shed off some of their staff in attempt to lower the production cost or the business cost, so that they have much needed profit cap. The lower numbers could also be attributed to the rising inflation in the United States, which we are seeing private firms not really being optimistic to acquire or onboard new staff. Now, with that in mind, we proceed to the chart to see this has had a weakening effect on the dollar. Remember, when price prints below expectation, it weakens the dollar. When it prints above expectation, it strengthens the dollar. So in this case, it printed below expectations, which weakened the dollar. Before that, we have been having a really weakening dollar, which has been reacting differently in context to the financial asset that is in question, right? So let's proceed to the charts to see the play out of that. Very nice. This is gold from the daily time frame, I think. Yes. So gold has reacted from the 2875.60 area of interest and is now rallying up. Would like to see it take up the all-time high close to the 3000, which is 2954.52. And this is likely going to be the case as long as the trade wars continue. Remember, the trade wars meant simply to open room for renegotiation of trade deals between countries. And a good example is the trade war between Canada and United States, which the United States began by opening conversation on increasing the importations taxes on the importations of Canadian goods to the United States up to 25%. Now we see the Canadian state through the Prime Minister also imposing 25% tax on up to 155 billion US dollars worth of imports to Canada. So this is causing tension because of the uncertainties and the back and forth between states and state corporations and between these powers is giving jilters to investors, which they will have put their money in something safe, and gold has provided that safety in the midst of crisis and geopolitical tensions. So this is going to be likely the case. So considering to get in for long position could be established as a risk-off approach and a much more less risky approach to this particular market. Moving on to stocks, beginning with a broader view of the United States in aspect to stocks, which is US 500. We have been seeing a bearish trend, which is likely to continue, and we're going to monitor this closely. The reason it's continuing again is because of the trade wars which are happening, which is causing a little bit of jilters in the stock markets. So we see the S&P 500 of the US 500 continuing to be in a bearish momentum that we have been experiencing way above at the point of 6155.90 price in S&P 500. This is likely going to continue in this basket of stock that we call US 500, and we are going to be monitoring upcoming geopolitical news that might change this, and what would that's likely to be renegotiation of this particular trade pacts to see it even much more clearly in a much more leveled asset. US 100 of the Nasdaq is a good one to look at. We see that we are closing with almost doji candles. This is the daily time frame. So this is the indecision is caused again by the uncertainties. Now, as stocks continue to go down because of the uncertainties, we see that gold is going up. So this could be quite an interesting scenario to consider when involving hedging in your asset portfolio, where when you get long on one asset and you get short on one asset, it is because of the correlation of these particular assets in regards to their movement and the forces behind this particular movement. It's important to remember that we define the financial markets as a space where investors and traders get to speculate on the appreciation or depreciation of financial assets with the aim of making possible profits. Now, having this in mind, movement or momentum, because the financial market is about time, price, and momentum. The movement of these particular assets, either in appreciation or depreciation or an uptrend and a downtrend, that is what we like to see as traders. May you be a scalper, day trader, a position trader, or swing trader. We all want to see movement. If you get to look a little bit on assets, on currencies, Euro USD, Euro had quite a field day in the past 3 days, so where we have been seeing key levels being broken drastically, and this is to show us that the European, the euro, which is the medium of exchange in Europe, is recovering drastically to continue perhaps with the bullish trajectory that it had begun. Also, for entries, this could be considered a quite sharp rally. Would want to see retracement for us to consider continuing to get in for the longs, but longs would be considered a risk of approach or less risky after retracement to key levels. And if we get to look at the twin sister, which is positively correlated, which is USD, GBP USD, we'll see much more of the same movement. And this can lead us to one particular conclusion, that the US dollar is weakening, brought about by the imposition of taxes, also or tariffs by other countries. We have seen Mexico attempting to renegotiate, but having a hard time with the new 47th administration. But Canada deciding to go in that route, and perhaps negotiation to come out later. Economic data also coming from the United States is being impacted, where we see the number of people employed in the private sector decreasing drastically, and we are going to be monitoring this as this proceed. Now, as long as this is the ongoing trend, things are not likely going to change, but of course we are going to be monitoring them day by day to see how to respond to this in regards and context to the financial markets. As a disclaimer, this by any chance is not financial advice. This is purely meant for educational purposes. It is therefore very important to do your due diligence and observe risk management, proper risk management, so that you have longevity in the game to be able to participate in the financial markets long enough to realize possible returns, which is the case if you have the right information, and that is what we strive to do here or in HFM through our various programs like this, the Daily Money Market Call. If this is your first time, attempt to visit hfm.com, attempt to register for an account, and you'll fill in your details, and our experts will get in touch with you to take you through the registration until you become comfortable to participate in the financial markets and you become an investor, which is a journey that could be quite worthwhile compared to many. Now, see you guys tomorrow, the same place, the same time, to do things the same way that has proven consistently profitable. Until then, take care and God bless you all.